Let's get those top stock picks from our panelists now. Shiraz, we're going to start with you. You've got a medical company here.
Yes, a medical distributor, McKesson. They are the largest on the pharmaceutical side in North America. They made a very good acquisition in Germany, which gives them scale in Europe. And overall, this is a scale business, relatively low risk. The longer term trends for the industry favor them. They don't have any negative effects from the healthcare reform. If anything, it's on the margin, somewhat positive. Additional people coming in, additional volume for drugs, and that's good for distributors. Excellent balance sheet. They have been deploying their cash half into share buybacks, you referred to that in the other segment, and then making acquisitions to scale up. And this is, in the end, a scale business.
So just the more drugs you have, the bigger your revenue stream.
That's right. So the very strong momentum on the earnings side. They beat in each of the last 2 quarters. Estimates have been steadily going up. And this company has been a Zacks rank 1 or 2 since the summer. It's been bouncing between a rank 1 or 2. Currently, it's rank 1. Has had a very good run, like everything else. But I think the momentum is still behind them.
Tracy, you're taking a look at a somewhat talked about entertainment company. He said tongue-in-cheek.
Exactly. It's kind of interesting that as the value strategist, I've chosen Netflix, which has no value whatsoever because, it's trading at 192 times. It's not exactly a cheap stock. And they've said this in their press release for this last quarter. You never see the companies actually come out and say, hey, our stock is crazy and be warned, it's had all these ups and downs in the last 10 years and this is one of the ups and it's not normal.
That's interesting.
Yeah, but, they're just basically trying to warn investors that it's volatile and, they got a good business model, but it's going to take time for them to, really develop it. But you can see it in the earnings. They made only like 29 cents last year and they're supposed to make over $1 this year. Earnings growth is like 500%. And then next year they're supposed to make over $4. So another 140% earnings growth there. But it's a matter of, them making original content now much more so than just getting the DVDs in the mail or even just streaming movies. That was always the real question with Netflix, like where's the content going to come from? Because they were buying it from the big studios and it was mainly just movies. But now suddenly, these TV series, miniseries, original shows are all in play. They're the first network like this to get an Emmy nomination for one of their shows.
Yes.
And now they just signed this deal with Disney for the Marvel characters. They're going to make 4 new series with these superhero characters, and that could be huge for them too. So, and I've actually been hearing, through family and friends, them actually saying like, oh, I watched this on Netflix, like meaning Netflix as a network. And you never heard that, like I watched it on HBO or Showtime or something. And so that's all new to them too. So there's exciting things going on. Stock has come back since it reported.
Since the CEO damaged it, right?
Well, yeah, since he said it's crazy and be careful because it is trading at 192 times. So it's still expensive here, but you are paying for the growth. It's been a Zacks #1 for forever. It's only missed once in the last 5 years. So it has good fundamentals, but you got to know you're paying a lot for it.
Tracy, I want to ask you, do you think it was the CEO's responsibility or do you think it was irresponsible for him to make those comments? Because look what he did. the stock rallied hard into a great earnings report and he basically knocked it back down $60 and took out all the small investors, right? Who wants to hang? He made it more volatile.
Maybe, but he doesn't want it to turn into, this crazy story that the stock is, irrational exuberance. He wants to focus more on the business side.
But who's driving that stock price up? It's the institutions who are looking at the earnings growth that you're talking about, right?
They are, but I think he just wanted to take it back a notch the same way that they did with Tesla.
Yeah.
Take it back.
He created a better buying opportunity for a lot of folks.
Yeah.
Interesting that you mentioned their talks with Disney as Disney looks to exit the television market and sell their television stations around the country. Maybe that is a subtle indicator that they and Netflix will get together in the new year as far as their content goes. Kevin, you have a drug company.
Yes, Pharmacyclics is a $9 billion biotech company. They specialize in white blood cell diseases like leukemia and lymphoma. And they've got a drug right now that it's called ibrutinib, and it's received 3 separate FDA breakthrough designations. And that's like the FDA going, we like what you've got. We like what we've seen. We want we want to help you push this drug forward, as long as you meet all the hurdles of the research trials and so forth, because it could be very instrumental in treating what they call B-cell malignancies across the board. So it's analysts look at it as what they would call a potential blockbuster drug. You're talking, I've seen sales estimates over the next, say 5 years, anywhere from $5 to $9 billion. So this, at $9 billion, it could be one of the largest selling drugs ever. So that's why the analysts are very enthusiastic. That's why you've seen the stock price go from 60 to 120 this year. But there's still opportunity in the stock. So I've been saying, let's buy it under 120. We bought it for the FTM trader. And the thing of it is it's not going to rush to price in the most optimistic expectations because, they've still got to pass all the FDA hurdles. So right now, the company just reported they actually had a profitable third quarter. They say they're going to be profitable in Q4, profitable for the year. But that really doesn't matter. It's really all about what's going to happen with this drug. And the projections were that the FDA would give a positive ruling by February. The company just said in their earnings call last week, we could hear good news from the FDA before the end of January. So, but the stock is still sort of in a holding pattern here at 120, waiting. They have good communication with the FDA, good turnaround on information and that kind of thing. They also have 8 other drugs in phase 3 trials. So it's not just going to be a one drug wonder, although that's the valuation right now in the company with, you've got Deutsche Bank with a $170 price target. A lot of the analysts are way up there because they're looking at the potential of ibrutinib. Another good thing happening here going into December are the American Society of Hematology, the big conference, hematology, involving the blood. So a lot of good things happening here. Almost forgot, big partner, Johnson & Johnson. Certainly helps to have a big partner like Johnson & Johnson when you're developing a drug.
Sure.
You need to get those milestone payments to fund R&D.
All right, we have to leave it there for time. Thank you all for that. Don't forget, more stock picks on our website, Zacks.com. Get on over and check them out with everyone here. I'm Terry Ruffalo.